Well, good afternoon. Good afternoon and welcome. Welcome to another of our webinar Wednesdays, managing your small business through the pandemic crisis. Well, good afternoon. I'm Kelly Bearden, and I'm the director of the CSU Bakersfield Small Business Development Center. And can you believe webinar number 26, a half of year of doing this, of you managing your business through this crisis? And me today trying to manage my voice through the smoke and bad air quality and everything else going on. So it's interesting times we live in. That's an understatement to say the least. So today we're going to go through and continue to go on with our webinars and talk a little bit about some kind of breaking news and not breaking news. I'm going to share my screen in just a second, but I'm going to cut off the video today because I'm actually experiencing a little internet problem here, and I want to make sure that we are able to get through today's webinar with you at least hearing my voice. So do a little something different, show a little bit of the screen at the beginning and maybe during the questions and answer series. But until that point, it's going to be basically video off. So today we are at webinar number 26. If you will today, use the question and answers box, and we will get to your questions at the end. I did tease you with a little bit of news that's coming forth and forward from the SBA. Not a lot of breaking news, but some interesting things to share nonetheless, and we'll go over that. So it's been kind of all over the board. You know that when we show up on Monday with our press release, or in this case Tuesday, and put out the webinar for Wednesday, that things can change, and today is another perfectly good example of that happening. So a little bit about, the SBDCs nationwide in all 50 states, additional 6 territories of the United States. We're part of the Central California region, which my map is somewhat incorrect. It doesn't include these two Santa, counties, Santa Clara and Santa Cruz, which are in the Northern California region. But the rest of the Central California region depicted here is a number of centers throughout our region. In addition to us proudly serving Kern, Inyo, and Mono counties, we have centers in Clovis, in Merced, Modesto, Salinas, and San Luis Obispo. So reach out if you have any business issues related to COVID or anything else, expanding some of the other issues that could come up at any given time. So the SBDCs are here to help, and we're here to help, and we're here today greatly because of our sponsors. And much thanks go out to Kern County, California, Mid-State Development, GoBiz, the CSUB School of Business and Public Administration, SBA, and the Blue Tech Valley Project. So September 9th, wow. So what are we up to today? Well, was there potentially a actual stimulus breakthrough yesterday? There was definitely some legislation that was introduced in the Senate, and we'll talk about that and maybe the political process that we're dealing with on all this. We'll look at the state and county guidelines and kind of where we are with COVID. I thought last week's guest speakers did a great job in actually defining the new guidelines that we have and the new protocols that we have for opening up our small businesses that are really impacted now, those in the hospitality, particularly dine-in, lodging, gyms, movie theaters, places of worship, etc. So we'll visit that. We've been through the disaster lending process with the EIDL loans through this pandemic, but there's more coming with SBA wildfire, drought, there's civil unrest. So there's disaster loans that are coming that are more imminent. I know many of you do not want any additional debt, but now really there are plenty of businesses that really are looking at potentially another disaster because of the wildfires particularly. If we have time, we're going to look at, I really want to spend time on firms that are winning the pandemic. Businesses out there nationally, maybe globally, that are actually thriving during these pandemic times and how they were able to pivot and actually bring more business. And I think we saw a little of that in the poll last week, or actually 2 weeks ago. on that particular question on how your business was doing. Now, we had forecast a big time primer where we're going to jump into the PPP forgiveness and a primer. Absence of any news or any additional frequently asked questions or guidance from SBA, we really don't have a lot that's really changed in the last month, and we're still kind of in this holding period. However, tied to this is some slides, a slide deck I want to go over with you in a little bit. And it just came in at literally the 11th hour. And when I mean the 11th hour, it did come in after 11 a.m. this morning. So within the last hour, we received kind of a link to a webinar that we'll provide with you later, but it's also an Ask the Regulator Basics of PPP Loan Forgiveness. And this was an event that was held last week. Over 12,000 people registered from financial institutions. 9,700 people watched the webinar live that was put on by the Federal Reserve, the Treasury, SBA, the Federal Insurance Deposit Corporation, and more entities. So we'll kind of go over what they discussed and see, because I think it's really important that you know what the lenders and you really know what the banks are really looking at as far as the forgiveness process. We're going to jump into the updates on Kern recovers, Inyo and Mono, and your questions and a poll. And just when it seems like we're just talking about the same old stuff, everything always seems to change. So let's jump into the poll. And also, please use the question and answer box today. If you have any questions that you want to ask at the end of the webinar, we'll definitely do our best to answer those. And our poll question today is, and let me kind of set this poll up a little bit. It's been launched now, but last week we had a suggestion that we actually have our poll question on the employer tax deferral program, where you can actually use this particular option in order to increase cash flow. So do you, as an employer, anticipate offering the payroll tax deferral option to your employees? This is one that runs from September through December. There's guidance that needs to really be added to this. But if you're an employer, is this something that you're considering in the tool shed as you roll through the rest of the year? This was one of the presidential inquiries and presidential, whatever those things are called. So, okay, well, jump in and vote. We're getting a lot of participation. We're up to about 56% of you that have voted. So let's end the poll and share the results with you. Again, do you anticipate offering your employees, the payroll tax deferral option? And with a great number of you voting, it looks like 65% or 2/3 say no, 65% no, about 10% yes, and 26% really probably want more guidance or really don't know at this time. And probably not a big surprise from my perspective on that, but not too many of you, maybe a third at most, will offer the payroll tax option as that continues to kind of unfold. Okay, well, thank you. I did have, I know how you like kind of the whimsical questions out there, and I did have, yes, planned I did have the other poll question with potentially a Jimi Hendrix question, but next time, maybe next time. So let's move on to what we're going to be talking about today. And we still are looking at potential stimulus breakthroughs. And really, the breakthrough that we're talking about is the rollout yesterday in the Senate by Republicans of the skinny stimulus bill. The talks have been stalled. We've known that for quite a while, and really kind of the stimulus is holding up a lot of things that we really need as a country, both individually and as business owners. And so the Republicans rolled out what version was a skinny stimulus that used some of the carryovers from the CARES package. about 600 billion of that and another 300 billion to roll out a basically $1 trillion package. And that package was basically to provide maybe four particular issues. It was going to add some enhanced unemployment. It was going to do something as far as somewhat of a PPP2. It was going to offer some liability protection to businesses that are worried about some of the other issues. And it was also going to actually include some testing for schools and some dollars for additional monies for testing. So with that, it was kind of met with some probably not surprising criticism from the other side of the aisle, of which they continue to look at more money for state and local governments, maybe the stimulus check, and also more for UI, and then a lot more for schools and for local and state government. So that's kind of what rolled out, and hopefully there's an opportunity to do this. We all know that time is short before the political election coming up in November, and the political advantages by sticking by your guns by each party is kind of something that kind of renaissance with a lot of their core followers. So that's the political side on potential stimulus breakthrough. So hopefully we can get something done and get something out there. But instead, we're still kind of talking about hopefully getting something done. So that brings us to the opportunity here to actually now go in and let's kind of look at what is going on with locally, with kind of an update on state and county resources with COVID-19. And let's change screens here and go on to potentially see what's going on locally. And what we see is going on locally is there's our County of Kern Public Health Department. You see a lot of things that are happening with COVID right now. And kind of get the screen set up for you. There's our dashboard and what is kind of going on. And what we're hoping for is, as we've seen this continual decline as far as number of cases, is that we can finally get out of the widespread tier 1 category and into the substantial tier 2. As you heard last week, this only updates on Tuesdays. And I think it was another positive direction where we're headed for Kern. We didn't get to the successful tier 2. And anyway, it would have taken until next week, of which I believe we need 2 successive weeks. So we're still probably 2 weeks away still. But we're trending in the right direction. And there were 5 counties that moved from tier 1 to tier 2, of which then they included those 2 Santa territories, Santa Clara County, Santa Cruz County, Orange County, Amador County, and I'm forgetting the other one. So 5 counties were able to go from tier 1 widespread to tier 2 substantial, which of course brings indoor dining back into the focus. And even if it is at a 25% capacity, with fall and winter coming, outdoor dining is not going to be something that's going to be sustainable for a lot of our restaurants and other businesses that really depend on that. So many other businesses are, besides that, places of worship, lodging, hotels, etc. Gyms, fitness centers also fall into a lot of these categories. Even though with gyms and fitness center, it's 10%, but still, it is a move in the right direction on getting things opened. We would need to get to tier 3 before we had bars and distilleries and breweries where no meal is provided to get them to open. So there's kind of the focus, and it is improving. And do a little stop right there and kind of jump up here to where we look at some of the other options that we might have that are available. And let's go to the blueprint for California. If you recall, when we put in Kern here, we look at the widespread risk and some of the other things. So again, our goal is to try to get from widespread to substantial. And that is the direction of where we hope to go. So going now to Kern Recovers program. And just to make sure you're looking at the same screen I am, Kern Recovers here. So, Kern Recovers continues with mostly the PPE program. So locally, we have the PPE program that is continuing. And there you see a lot of the numbers and a lot of the businesses that are being impacted to try to reach this goal to get to a different tier, but also to protect our employees and customers and so forth. So again, businesses can get free PPE. I know also in Inyo and Mono, there was capabilities in order to do that. Also tonight, the Bakersfield City Council is meeting to where they will hopefully approve a $10 million loan program for City of Bakersfield. And in that will be part of the Kern Recovers is what they would use as far as the platform, but it would be potentially $10 million of small business capital for local businesses. So some of the other things that are kind of happening, let me shift over to this screen for you. And we talked a little bit about not only Kern, but also a little bit about what's going on in the Inyo County area. For example, Revive Inyo County is going to have CARES Act funding for local small businesses. So this is something that is now up and going, and you can actually apply for grants for up to $25,000 for qualified Inyo County businesses. You need to apply by November 6th. They can be used for a variety of purposes, including payroll, operating expenses, telework equipment for businesses, PPE, etc. So there's an online, and we will provide this resource for you. So if you're doing business in Inyo County and have a presence there, the Inyo Revive program could be for you. So also, in addition to Inyo Revive, Mono County is going to have some CARES Act funding and also some other CDBG funding for small businesses. This Mono County will be different from the earlier program that was in the town of Mammoth Lakes and will be in the unincorporated areas of Mono County, going all the way up to Lake Topaz down to just north of Bishop in southern Mono County. So unincorporated areas will be available there. So lots going on, and still continued programs that are kind of assisting businesses and trying to get us to where we need to go. So we talked a little bit about some of the SBA wildfire drought and some of the unrest disaster loans. It seems like there was a drought, and then the civil unrest created some opportunities in California for those that were impacted by those disasters to try to recapture some disaster loan money. But the wildfire one that really kind of has already started, but it's going to probably be greatly expanded due to what is happening in Fresno and Madera County, and just really throughout California and really the West, as Oregon and Washington have exploded in wildfires also. So if you have a business that has been impacted through wildfire, I mean, if you're in Fresno County, your business could have burned, and Madera County. So those would be the actual physical loss rather than the EIDL program that we became so familiar with through the pandemic. But these programs are going to be out there, and they do add another layer. And we talk about which businesses really want to add more debt, and I know there's not any, but it really comes down to where you are as an individual business and where you kind of fit in all that. And if you're all in, as I like to say, if you have all of your resources in your particular business, you're going to do everything you can to keep that going, even if it's adding more debt. So keep that in mind. We really wanted to spend some time going through the companies that are really winning the pandemic right now. And there are a lot of businesses, you can look at locally and nationwide at Domino's. Remember a couple of years back, the Domino's CEO was out for the Distinguished Speaker Series at CSUB and had a great conversation. And at that time, I remember about 3 years ago, Domino's was doing things like just starting to take orders on the text. And I remember asking the CEO, and I go, pizza's not really a really innovative and technology business, but I'm sure that there are a lot of things that you could do. And the response I got was basically a smile and no words. And then soon after that, they came out. But really, what they did was they positioned themselves, and they really positioned themselves with a lot of their newer programs that were starting before the pandemic to really shine and rise above. You've seen industries such as Shopify, which is really one of the bigger pandemic winners, and e-commerce platform that really a lot of our small businesses that needed websites have tapped and really gone on to that online presence and really doing things. So there are businesses out there that are winning the pandemic. We see that there are businesses that are thriving, businesses that are succeeding. And we see even mortgage rates, and people are buying assets, buying fixed assets, and the market's holding firm. So we're going to get into the PPP forgiveness primer. We are going to visit the spreadsheet. We're not going to probably have as much time as possible, but we are going to make that available, as we will do an e-blast this week where we show a variety of resources that we're discussing today. So anticipate if you're interested in any of these resources, be it the spreadsheet, some of the websites, the webinar from last week that we're going to go over in a little bit, and also any of the updates on Kern recovers, Inyo, and Mono. So those will be available to you. Okay, some of the other things that are happening, we've been going through this list of lenders who are the biggest PPP lenders, and we've gone to their websites and we're seeing the same thing. I'm not going to take the time today like I didn't last week. I think 3 weeks ago we went through JP Morgan Chase, and JP Morgan Chase had some news yesterday that was kind of on the interesting side of things, whereas they basically came out and said that what was happening was that the bank had found that there were some improprieties between employees and customers related to a number of the stimulus programs. Yes, my voice wants to go away. So they have found evidence that employees and customers might have actually got into a little bit of some fraudulent issues. The bank didn't detail what the instances were, but yesterday in an email to their employees said that they had found customer wrongdoing involving the PPP program, unemployment benefits, and other government programs aimed at easing the coronavirus pandemic's economic effects. And they admitted at Chase Bank that some employees had fallen short in that, and that the conduct does not live up to their business or ethical principles and may even be illegal. So that was in the news yesterday, as far as groundbreaking news. So we're going to probably in the next couple of weeks, when we get closer to the forgiveness actually being rolled out by banks, look at some of these other banks as far as US and Zions, some of the middle tier banks and some of our local banks on what they're doing, and just try to provide a lot of information in that particular area. We know that when we talk about stimulus, that's what we've wanted and we continue to strive for. So, that's what we particularly really are looking for, is we're looking for the blanket PPP forgiveness. We're not getting that. So we're going to continue to go on with the PPP forgiveness. And as time goes on, it seems even likely that these are going to happen. There was bipartisan support for tax deductible PPP expenses. We wanted the PPP2, which really would benefit those most impacted businesses. The 7A version, some relief for underserved markets, including minority lenders or borrowers, and then increasing the EIDL amount, and then the guidance is what we really want. So we're going to continue to stress for those and remind people that that's what we keep looking for in stimulus, and hopefully it's here sooner than later. So now, you know, getting into the management side of things, before we do that, before we get into the managing side of this, is, this is my kind of, actually, let's go into this. This is kind of my perspective of the businesses out there that I've classified. We have thriving businesses. We saw that in the poll. We see that in society. We see it in a number of different businesses and industries that are thriving during the pandemic. So we also have businesses that are established and maybe multi-generational. They're set up for the long term. They're going to survive this thing quite well. They have either resources that they can draw on, a business model that works and that will survive long after the pandemic. We have businesses that I classify as being solid, and they can weather the short, moderate disruption. Longer term might be more of an issue. And we have businesses that, they've been around a while, but further capital access is harder to get. And then we have those that can walk and close and sell their business with limited but financial damage, to say the least. And then we have those, as I described a while ago, that are all in and they lose everything with a failure. So the reason I bring up these 6 categories is because this is the managing perspective, and this is the managing of the business and managing of the PPP. And we have so many business owners out there that come from such different perspectives. Obviously, if you're all in, you're looking at all resources and everything to get through the crisis and to survive. But there are other businesses that don't want additional debt because, maybe they don't see their business coming back. They can actually either close their business now, liquidate the assets, retire, maybe close or get into something else. And they can, or sell even the business with, again, limited financial damage to themselves. We have those that are still looking for further capital, and that might be in the line of equity or debt. And we'll talk about some of those. We'll really get into this in a couple of weeks when we start looking at some of the further capital, since we're not going to apparently get anything that we really want on our stimulus. Solid businesses can weather the short, and so forth. So use that as kind of a perspective and a framework in going into managing your particular business, because that is really, when we get into this is what it's about, is managing your expectations and where you see your business going in the next year, 2 years, even 5 years down the road. So let me do a new share. Let me pull up a little bit of what we were talking about earlier. And from this, what we'll do is we'll jump in. Actually, you know what? Let's jump into the spreadsheet right now. I need to save enough time for your questions, and I need to save some times for that other presentation that I need to go over. But let's jump into this right now and go to the spreadsheet and kind of look at a few updates. And this is our PPP that you've seen many times. I think we rolled it out around webinar 5. This is webinar 26, so it's PPP 26. A number of you out there have come on since we've talked. We haven't talked about this spreadsheet in many weeks. And the spreadsheet was just designed to try to show kind of an easier flow and to try to easier describe some of the concepts and some of the terms that we were dealing with in managing the PPP, and for you managing it from your perspective. So you'll recall that one of the main things that came out was the PPP Flexibility Act. And that was on June 5th and changed a lot of the things, a lot of the issues that we had with the PPP. So with that came, one of the big things was the option of having between 8 and 24 weeks to use the funds, 75% down to 60% for payroll. Gave us the entire year to hire people back. It also extended the term out for 5 years potentially. Now, remember your 5-year term, if you were a pre-June 5th, is going to be at the discretion of your lender if you have money that's not forgiven. And for those of you that received the EIDL advance, we know you will have amounts that are not forgiving. So also, it provided conditions for which the FTEs are reduced. And as much as we've tried, we want to get a little bit more guidance in that particular area. The payroll tax deferrals, we talked a little bit about that. The owners and salaries, employees compensation was a big issue. We had an 11-page original forgiveness form that has now been modified down to a 5-page version and the easy application that applies for a lot of people. And the safe harbor for bringing people back. And a couple of other things incurred or payroll still provides. So that gave us the opportunity to start managing our business. A couple of weeks ago, we looked at, or actually last week, we looked at the poll if we were going to go 8 or 24 weeks. And this was the poll response from last week. 26% of you still don't know if you were going to keep your original 8 weeks or to take the entire 24 weeks. And so for those quarter of you that might be still out there, this is kind of the strengths and weaknesses from my perspective on why you might choose 8 weeks and why you might choose 24. If you were planning on spending it in 8 weeks, 8 weeks seems to be, it's kind of a guideline. If your business, you thought maybe your business wasn't going to be as solid, it wasn't going to thrive, and it turned around and did. Maybe you had the payroll or used more payroll. That could be one of the reasons. So also a lot of people that we looked at our survey down here, 30% of you, nearly a third, we're looking at keeping this 8 weeks. And there's a number of reasons why you wanted to do that. Planned it for 8 weeks, it's done. There are some of the other reasons. So why 24 weeks might be better? Obviously, you have more time to spend the funds. Now, 60% is easier to reach, and the 60% is true even if you go to 8 weeks. If you use your 8 weeks, it's only 60%. But you might be able to do something with cash flow. And we knew that if you wanted to do the maximum that you could take for a business owner, which is $20,833, no matter if you own one business or 100 businesses, across those entire businesses, the maximum you could take from all of those companies is going to be the $20,833 that you needed to elect the 24 weeks in order to do that. So that's a little bit of a primer. We then got also questions on what you could do. And all you have to do is answer yes to one of these questions. And that is if you're an independent contractor, sole proprietor, have no employees, yes, you can do the easy form. If you did not reduce the pay of any employee by more than 25% and did not reduce their average hours, boom, easy form. You did not reduce the pay of any employee by more than 25% and your business was unable to operate at full activity during the covered period due to compliance with government requirements or guidance. If that's a yes, and really this is maybe one of the areas where it's the safe harbor to whereas if you look at the Secretary of Health and Human Services, you look at the Center for Disease Control, the CDC, and you also look at the one other government agency that they're all federal entities, and a lot of what we're dealing with is on a state level. Our state mandated requirements are shutting us down on a state level. And I think that is one of the areas that is causing a few people more harm than good. But so that's getting to the easy. In the past, we've looked at 3 scenario type of businesses. Our kind of breadwinner company has been this fictitious Kelly's Grill LLC, where the owner is actually named Kelly Grill, which is unique. And we look at a seasonal type business. And one of the things about a seasonal type business, and then we also look at, before we go too far, a mom and pop business where we looked at that. So the seasonal type business, we did get some other guidance on that as far as the period that you could take for FTEs. and you had a couple of different options, but then the one that came out maybe a month ago or so was that a seasonal employer can elect a 12-week period, and that is any 12-week period from May 1st to September 15th. So I think what they really tried to do with that was to allow different seasonal businesses, because some of them, as we know in, say, our Mammoth Lakes region, might be seasonal businesses that are more focused on winter and snow. And we have most of our seasonal businesses, though, I think throughout our region, throughout the state of California, are going to be those that probably are going to be more summer-based, though. So this gives you multiple scenarios. Then we came up with our plan, and we used this, and our plan is kind of, there's a blank version of this that we'll send out for those that don't have it, but it kind of just takes the amount and what your date is when you started, and then allows you to spread it out and plan what your expenditures are going to be. Now, I took it one step farther by using our employees when we were doing some of our employee calculations. But then also that was our plan. So then we also had our actual, because you can actually move the numbers around. You know, it's a 24-week period. You can get to week 23 and still move some of these around to manage it best for your particular business and how you actually see it benefiting you. So keep that in mind. It's not like during your 24-week covered period, if it's 24 weeks, you have 24 weeks, and you can at week 23 elect what expenditures you want in there at any given time in order to maximize the benefit for you. We looked at the full-time equivalents, and really with full-time equivalents, I really want to get into this. You know, it comes down to, you know, at the election of the borrower, you could use different periods. Now, many of you, when you set it up on your full-time equivalents, so basically if you have two 20-hour employees, that equals one full-time equivalent. If you have a full-timer, that's a one-time equivalent. And there's two different ways, and at your benefit, you managing your program, you can actually use the actual, or you could use part-time employees or full-time employees. So if you have a business with a lot of part-time employees, it's going to be worth your while to run the calculations. And you can do that from, you know, from February 15th to June 30th. And it's going to be the average per week for that period. So there's some calculations. If you have 200 employees, this is not a calculation that's going to be fun to do. If you can get through that particular part, but so there's that period, and then there's always the other alternative period, which is January 1/20 to February 29th, 2020. So you have two distinct periods that you can use to your benefit. So I'm thankful that a few of you have reached out and you have showed me some tools that are out there for PPP forgiveness. And I have gone through those, and when I get to this part of it on FTEs, it's still at the top of the page says they want more guidance. So we're not really getting to the point to where we want to with that, hopefully soon. But these are the things that you have to, as you manage your program, you have to remember that you're going to have to provide. You're going to need your IRS Form 941 quarterly tax filings. So I think pretty much people are familiar with their quarterlies. If you have employees, your annual tax filing, your payroll register, and also your bank statements. So really managing this FTE part of it, if you can't use the safe harbor from the fact that your business is impacted, and we're still waiting for that, and hopefully next time we talk about this we have an answer. Here's a kind of a scenario we threw out on the EZ form, that what happens if your payroll, and this was for our example with Kelly's Grill, and let's go up here, and what happens, we had a PPP loan amount of $100,000, and what happens if we did not reach the 60% threshold? We did this initially about halfway through, maybe week 13 or so, on if there was feelings at the time that there could be a cliff if you don't reach There's no cliff. It's a staggered forgiveness, and this shows you a perfectly good example. In this case, we had 78% of our payroll, a little bit of lease, 100% forgiveness, $100,000. In this scenario, we were under the 60%. So we wanted to see if we were at 58,000 when we were required to hit 60 for forgiveness, how would that impact our money that we had to pay back? And it was really minimal here. It was basically about $3,300, $3,333.33. So if we fell off even more drastic than that and had 44,000, what would we have to pay back as far as it wouldn't be forgiven, and the amount jumps to $26,000. So that was just kind of an example of that. We have in here our Excel spreadsheet form. We have kind of a payroll form, and part of really kind of the nuts and bolts of getting into a lot of the calculations is Schedule A and the Schedule A worksheet on the PPP form. And we threw in a version of that. What else do we have down here? We have forgiveness if you want to go 24 weeks in a blank. For those of you that don't have this, oh, my cash flow forecast is in there. That's funny, huh? How'd that happen? Forgiveness for 8 weeks. If you want to go back and say, I just wanted it for 8 weeks, there's the 8-week form. And then also we had some idle strategies if you might have used your idle proceeds a little differently than your loan agreement and authorization says. So that's the spreadsheet. We'll provide that to you, those of you that want it. I'm going to do a stop share because I'm running out of time and I really wanted to jump into this. Sorry we didn't have more time for that. But let's jump now into this. So yes, this actually happened last week. And at the 11th hour today, this is the information that I got, and it was more or less a forgiveness process ask the regulator session. You'll see a nice disclaimer here that, I don't really mention this, but I have the same disclaimer every one of these webinars. Isn't that ironic? So I'm going to try to go through this. It's a PDF, which means it's very touchy. So what they did was they covered the overview of the PPP process. And again, a lot of this information is basic that I kind of glanced through. I only had a chance to go through it momentarily, but let's go through what they covered here. So they covered the costs that were, and I think that we've done pretty good over the 26 weeks for either the 8 or 24 week period of identifying what costs are eligible costs. Some of the payroll cost considerations. Remember the incurred or paid. In your period, you could have incurred the money beforehand, but paid it afterwards on both ends of your 24-week or 8-week window period. So they talk about both of those options, and we've talked about that in the past. There's kind of your timeline. We've talked about the 5-month process potentially from when you submit an application to the lenders. And again, this was a very, very well populated webinar, which we'll send to you, that had nearly 10,000 people on it. So some of the other requirements that they're going to require, and this was essentially coming back to the lenders, payroll, you're going to have to show some type of proof, and others, you're going to have to show proof of an obligation and proof of payment. So on your lease, if you have rent, not only does it show that you're going to have to show that you paid your rent, but the obligation was in place before the pandemic actually happened. Again, we covered that could have been modified and it would be okay as far as it is an extension or a modification that was in place before February 15th, which seems to be really the magic date on a lot of this stuff. So numbers 3 and 4, interesting. Schedule A and FTE documentation. So there gets into a lot of the eligible costs. And since we're going to share a lot of this with you, let's try to touch on some of the high points here, because there are. And there shows the three at the question at the very beginning that we showed, the three people that can use the easy form. The easy form is obviously the way to go. It's much simpler. You don't have to do the Schedule A and list all the employees. But then again, you have to be able to certify. And what you're going to do at the end of the day is to certify that the information you're providing is correct. So there's going to be that certification, and you want to feel comfortable knowing what you have submitted. So when you submit it to your lender, here's the four options, decision options that are going to come out from lenders. Is they're going to approve it in full. So they're going to approve the full forgiveness amount. They're going to approve it in part. They're going to deny the entire forgiveness and amount requested from the borrower. And they can actually deny it without prejudice. So be interesting when we have more time to cover this. That's particularly the last two, the differences between the potential denial and the denial without prejudice. And it looks like that will come from an SBA notification of the borrower that the loan review is pending at the time of the forgiveness application. So the SBA is already looking into auditing that particular decision-making process file. Okay. So this is just kind of for lenders, and they go through this particular process. The lenders are going to have access to the SBA platform, and the platform is what they're going to use to take your information and the information that SBA has on you, including all of your information, including your EIDL advance. And in that particular platform, they're going to go through and look at a variety of different factors and putting that in there. So really working with your lender and really getting that full forgiveness, if you believe you are entitled to it and expecting it, is really going to be really one of the keys. There's a resource center for lenders that's going to be available, and this is in the forgiveness platform. So there's resources where they have a lender checklist, and really it's going to be really maybe beneficial to get a hold of this checklist and user guide in order to try to help us know what our lenders are going to want. They have some videos, helpful videos, and in the platform also payment settings. So a lot of the boilerplate information that they need, the lender decision reminder, but again, it's four parts: approved in full, approved in part, denied, and denied without prejudice. So some of the communication tools that lenders are going to have access to in the platform. There's a submission process to where then it goes to SBA, and we looked at the guidelines where we had 90 days and 150 days earlier. The lender, once they receive your application, has 90 days to get it through this platform. I imagine most of them will try to do it sooner, but there is going to be a crush once this comes to a head. The forgiveness platform submission. So that process on slide 22 of 31. Some monitoring that they're going to have, and maybe that's on a bigger scale than your individual loan, the loan review, and moving on the payment to the lender, forgiveness payment, where the SBA then gets reimbursed for the actual loan, because remember, your bank made this loan. There's going to be an FAQ for the EIDL, and we have talked many times about the EIDL advance is not part of the forgiveness process. It's part of the process, it's just not going to be forgiven. That amount will be owed. Lenders then, I'm sure in here somewhere, are going to, if you're before June 5th, look at a 2-year term or a 5-year term. Some of the other general forgiveness FAQs, and there you go. Ask the regulators. And that's at the St. Louis Federal Reserve Bank. Okay, stop that share. And I'm still here. But let's jump into the questions now and go to the Q&A. And first, rather than look at me, let's look at next week. I know I'm looking forward to next week, and maybe even back a slide. Those are our businesses and how you manage and what. So let's get into the Q&A. And come on, it doesn't want to. Okay, so the Q&A. A little bulky today. Go to the Q&A box and put your questions. Will the presentation slide deck and recording be available? Yes, that will go out. That's was starting at the beginning, some of the early questions that might have been answered. So we'll try to work through those. And again, there will be a very comprehensive email coming likely on Thursday or Friday. And we'll include the Excel spreadsheet, the presentation of that webinar link, some of the other links, and some other things that we've talked about today. Self-employed, I received an $18,000 PPP loan. Need guidance on requirements and accounting principles I need to have in place. Well, depending on your $18,000 PPP loan for being self-employed, oftentimes many individuals, that's going to just basically cover their salary. If your salary was 100,000 or more, you can actually charge that up to $20,833. What we've recommended as far as guidance on that is to pay yourself in a routine basis over your covered period. I would stay away from a lump sum at the very beginning or the very end and just kind of draw it out like a salary that you have in place. If you're self-employed and have a business establishment, you could be paying rent, you could be paying commercial real estate, other mortgages, things like that. So um, that's the guidance I would offer at this time. It's cleaner if you take the entire payroll if you're able to. If your payroll is going to be based, if you're self-employed, off of your tax return and your earnings off of your tax return. So if it is less than that, then the other expenditures that you have going forward. Okay. Next question. If we spend all the PPP loan, can we apply for forgiveness or will we need to wait to the deadline? Good question. I'm glad you asked that. Um, One thing that we found is we found that you have two periods that we discussed. You have an 8-week period and you have a 24-week period. So if you have the 24-week period, what you need to do is you need to if you're going to go over 8 weeks, take the 24 weeks, but you can file for forgiveness whenever you spend the monies. So if you spend the monies at week 13, week 14, then you can apply for forgiveness at that time, as long as the forgiveness portal is open and your bank is accepting the forgiveness application. So if you go 24 weeks, um, it can be a little bit different. So if the Kern Recovers is funded again, will it be open to businesses that previously received Fed PPP funds? Those are the guidelines that are going to be discussed tonight because this is the City of Bakersfield money. They'll just be using the Kern Recovers platform. So just to make that clear, it'll be City of Bakersfield. It'll be monies available to businesses in the city limits of Bakersfield. And we'll expect more guidance on that tonight. And I'm sure next week when Keith Bryce joins you, he'll have information on that. Okay. I'm starting a new business here. Decided to lease a building in January and I've paid rent every month since. My new equipment has been delivered because of COVID. Um, I'm hopeful that my new business will start sometime this year. Now and then, are there relief loans or grants available to recoup my startup expenses? Well, if you're in the city limits, there might be a program there. Now, if you started your business in January, then you would have qualified for the PPP, um, and you could have potentially used that. But generally, if newer businesses, you don't really have, it's a tough question. Um, what I would do is I would wait and see what the city of Bakersfield comes out with tonight. That is going to be your easiest money that's available. The idle loan probably isn't a ex, great expenditure, and we'll go from there. What is your email? My email is kbearden@csub.edu. And in the email before and after, there's a link to that if you have any questions that I'm not answering or I answered unsatisfactory from your perspective or any other correspondence you would like. Um, Make sure I'm not receiving the emails. If you signed up for the webinar, you should get the emails. Oftentimes, I've found out they go into your junk and clutter, um, and we can go on with that. Can I use solely payroll in the 24-week period for forgiveness? And the answer to that is absolutely. Absolutely, yes, you can use it for payroll. I think oftentimes it's going to be cleaner and easier. You have reports that are reported to the government. It's easy and clean. Yes, the spreadsheet will be sent out. Um, let's see. Who can we contact to apply for forgiveness? And that is really at the discretion right now of your bank. If you have a PPP loan, your bank is the first gatekeeper to the forgiveness process. Banks were on that call last week. Remember, there were over 5,000 lenders that actually participated in that. So they were getting the latest on that as well. Did I read that correctly? The PPP will be deducted from the EIDL. That's the EIDL advance. So if you received an EIDL advance, it is involved in the PPP forgiveness process. It is entered and it is not forgiven. If you received a PPP and an EIDL, they're two separate loans and will be administered in two separate fashions. Um, For owner comp, is that 20,833 cap applied to owners greater than 5%? So owners less than 5% just have the standard one. And actually, this was some of the recent guidance that I believe we talked about either last week or the week before. And what it said is that, yes, owners over 5%. So if you're an employee of a business and you're a 1% employee owner, it'll go back to essentially what you can actually taking 24 weeks as an employee, which I believe is 46,124. So the entire 1923 a week can apply for 24 weeks for employees that are less than 5% owners in that particular business. Um, I think I just covered the max salary for owners and employees. Again, if you're an employee and not an owner, you can go 24 weeks for a total of 46,124. Again, it comes down to managing because you weren't anticipating paying one employee $46,124 when you applied for this. So it comes down to the managing of your particular grant. But yes, the max salary for employees that are less than 5% owners, where they don't have the discretion in order to actually make the decision on that, is 46,124. Owners across all business lines, all different types of businesses, the very most a business owner that owns 5% or more can pull is going to be that 20,833. How do I select between 8 and 24-week options? It'll be a process that you check the box on your particular forgiveness form. You'll be able to say, and everybody's going to have to do this. Everybody's going to have to elect between 8 or 24 weeks. And you saw the poll, how it kind of splits out between the audience of the webinar. So really, it's kind of like whatever's best, again, in managing your particular business. Your PPP. If your PPP is forgiven or not, is the amount considered income to the business. The PPP, we've talked about this before, but the PPP is not taxable as far as income goes. So any amounts that are forgiven, if the entire amount is forgiven, the entire amount is not considered taxable income. However, the expenditures that you have are not considered deductible expenses. So that is creating an accounting nightmare, and it's one of the items that we had on our list of hopefully things that got fixed in stimulus. So again, it's not taxable income, but again, when you do a tax return, and if say you're if you're an S corporation, you're going to have to claim that amount, and actually you're not going to claim the amount of income, and you're not going to claim the amount of the expenditures. So what I'm getting at is your book income statement is going to be significantly different from your tax income statement. Okay, well, I see that we're up, and we're about out of questions too. So you can't beat that. Want to thank everybody for attending today. We'll be back next week. We're really happy because Keith Bryce is back. Our special guest host is going to be back. Keith's going to be back and have a spin on some, really, I think, a great show for you next week, and really talk and bring in locally some maybe local businesses and see how they are managing their way through the pandemic. And so that'll be Keith Bryce back on September 16th for webinar number 27. There's my contact information if you need to contact me. Again, it's been great. Half a year done. Hard to believe, huh? My voice held up, my smoke-laden voice. My grandsons think that my beard has been affected by the smoke, and I told them, yeah, it's been that way for 25 years. But we'll be back next week and the week after. So good luck, and everybody have a great day. Bye-bye.